Everyone likes passive income. The idea of making money while you sleep makes dividends the most popular topic on my channel. At one point, I was making $1,000 per month with $225,000 invested before I switched into options trading full time. Now, making money while you sleep sounds great, but you still have to wake up and go to work the next day. So what about earning dividends to retire? What about earning enough dividends to live off of, hopefully forever? This video will be breaking down how to build a high-yield dividend portfolio in Canada. So I'm talking about retirement with dividends. I'll need to briefly explain the other side. If you don't want to do retirement with dividends, a lot of investment advice recommends the 4% rule. It means only invest in growth stocks like Apple, Google, Amazon, and then when you retire, sell 4% of your portfolio per year and you'll outperform or live comfortably. Why I like or maybe even prefer dividend retirement versus the 4% retirement is you don't have to sell anything. During a market downturn, during a recession, if your stocks drop by 30%, then you have to sell 4% to live off of. You're selling at a loss. With dividends, if you're able to grow it, there's no selling ever. Before I get started, if you're a beginner or new to Canadian finance, I've created a course for you called Canadian Finance Pro. It's 8 hours long, over 60 videos where I discuss budgeting, credit, inflation, managing debt, tax, where to invest, and how to invest for beginners. This video is a snippet of what I'd include in the course. I've just introduced a new bonus. With every purchase, I'll do a one-on-one chat for 1 hour with every new member. Now let's get to the video, starting with step 1, understand what dividends are. Just briefly, dividends are payments made by a company to its shareholders, usually on a quarterly basis. These payments come out of the company's profits and are a way for investors to share in the company's success. Dividend-paying stocks can be a good choice for investors who are looking for a steady stream of income. How much can you expect to earn? Well, that depends on the companies and the stock. For example, let's say you invest $10,000 in a stock with a 3% dividend yield, that's annual. That means you will receive $300 in dividends each year. Over time, as the stock price appreciates, your total return could be higher. However, it's important to note that not all dividend-paying stocks are created equal. Some companies may offer very low yields but are safe and stable, while others may offer high yields that may be unsustainable in the long term. So it's important to do your research before investing in any dividend-paying stock, which is why you're here. Step 2, determine your investment goals. Before you invest in dividend-paying stocks, you need to determine your investment goals. Are you looking to generate income in retirement, or are you looking for long-term growth and you're far away from retirement? Understanding your goals will help you choose the right stock to invest in. For example, if you're looking to generate income in retirement, you may want to focus on stocks with higher yields and a track record of consistent dividend payments. Maybe something paying 6 or 7% so you can earn enough to live. If you're looking for long-term growth, you may want to focus on companies that have a history of increasing their dividends over time. So that may be something that pays 3 to 4% now, but has been increasing for 20 years so that by the time you retire, it'll be at the 6 or 7% yield that you're looking for. Plus, you'll get the capital appreciation of the stock, which is a nice little bonus if you need it. Another part of investment goals is determining how much you'll need during retirement. Obviously, this is not possible. It's all a guessing game, but we can do our best. If you have a paid off house when you retire, that's the best case scenario. Then I'm guessing a couple will need $50,000 to $60,000 a year to live off of comfortably. That means right now we'll need a $1 million portfolio paying between 5 and 6%. Getting 5 or 6% stocks is easy, but getting to 1 million is the tough part. With reinvesting dividends, a few older friends of mine reached the $1 million portfolio goal in 20 years. I know it sounds like a long time, but if you start at 20, you'll be 45. If you start at 35, you'll be 55. I do think it's easy, but it's not quick. There are no quick retirement ideas or strategies. Step 3, do your research. Once you have a clear idea of your investment goals, it's time to start researching dividend-paying stocks. Look for companies that have a history of paying consistent dividends, that have a track record of growth. I've made almost 20 videos over the last 3 years where I break down and recommend high-yield dividend-paying stocks. When evaluating dividend-paying stocks, it's important to look at both the dividend yield and the dividend growth rate. A high yield is great for now, but it may not be sustainable over the long term. In terms of what constitutes a good or bad return, it can vary depending on the stock and the market and the industry. Generally speaking, a good dividend yield is considered to be around 3 to 5% in the US market, whereas in the Canadian market, we have some pretty safe 5 to 6% paying stocks, in my opinion. However, keep in mind that a high yield may be a red flag if it's not sustainable. Also, not all companies pay dividends. Take a look at Facebook, Google, Tesla, Shopify, or Amazon. No dividends, these are growth stocks. They're reinvesting their cash into the company. A few caveats to the rule. If you look at Apple, they pay dividends, but this is not a dividend stock. This is a growth stock that has too much cash, so they pay a very small dividend. I think it's less than 1%. I wouldn't buy this just for the dividend. Step 4, build a diversified portfolio in your tax sheltered accounts. That's the key point, tax sheltered. As with any investment strategy, it's important to build a diversified portfolio of dividend paying stocks, and it's important to reduce your tax impact or your taxes payable. If you're a Canadian, you have access to a tax-free savings account, which can be used for dividends, of course. This is my number one account for retirement savings. And we also have access to an RRSP, the second choice, and in my opinion, not as good as a TFSA. Make sure you shelter as much of your investments as possible. Okay, back to diversification. This means investing in stocks from different sectors and industries, and avoid putting all your money into a single stock, as appealing as it might be. There are a few random stories of people making more money by investing in a single stock, like Tesla went up 1,000%, but that's a risk, and those stories are rare. There are more stories of people losing everything by doing this. Diversification helps reduce risk and protect your investments. It'll help you sleep a little easier at night while earning that passive income. One common way to diversify your investments is invest in a dividend-focused ETF. These funds are designed to provide exposure to a variety of dividend-paying stocks, which can help to reduce your risk and increase your potential returns. I'll give you a few examples. I recommend XDV. It pays 3.84% per year, and it has 30 different Canadian stocks under one umbrella. Another one is SCHD. It's in US dollars. It pays 3.64% per year, and it has around 100 of the top US dividend-paying stocks. Step 5, reinvest your dividends. One of the benefits of dividend investing is that you can reinvest your dividends to compound your returns over time. This means using the dividends you receive to buy more shares of the same stock or a different stock. By reinvesting your dividends, you can accelerate the growth of your portfolio and potentially generate higher returns. Not potentially, I almost guarantee you generate higher returns. Some companies even offer discounts to enroll in their dividend reinvestment plan. They do this because it saves cash. They don't have to pay you the cash, they pay you in shares. However, keep in mind, reinvesting dividends doesn't guarantee profits, contrary to what I just said. There's always a risk involved in investing. If you enroll in one company's DRIP and it goes under or severely cuts their dividend, you wasted time and money putting more funds into a sinking ship. It's important to monitor your investments regularly and make adjustments as needed if you don't choose an ETF. Step 6, be prepared for market downturns. It's important to be prepared for this when investing in dividend-paying stocks. While dividend stocks can provide steady income and potential growth, they're not immune to market volatility. During a recession or market downturn, I think like what we're in now if you're watching this in 2023, companies may cut or suspend their dividends, which can impact your total return. To minimize the impact of market downturns, it's important to have a well-diversified portfolio, like what I mentioned earlier, and to invest for the long term. By staying invested and continuing to reinvest your dividends, you can weather short-term market fluctuations and potentially benefit in the long term. By reinvesting when the stocks are down, you can potentially double up your gains if and when we do rebound. That's it for this video, a quick one. Dividends are a popular topic for Canadians or even beginner investors on YouTube. If you're wondering why I didn't go into a deep dive of stocks and tell you what to invest in, I have around 20 or 30 recommendation videos already, so I'll link those so you can go back and watch. I actually still recommend all of them. I made these videos back in 2021 and 2022. I stick by them. I don't usually choose flavor of the month stocks, even though I have been burned by those a few times in the past. It happens, but if you check a lot of these older videos, if you don't want to invest the time or watch the entire videos, here are 4 recommendations in 4 seconds. TD, Fortis, Enbridge, and TELUS. If you've made it this far, I'm thinking of starting a new series. I saw a Netflix show, How to Get Rich. The host spoke to Americans and went through their finances, pretty much helping them manage their finances and get out of debt. I'd like to do this with Canadians. Let me know if you're interested and be willing to be filmed on YouTube or on Zoom. We don't have to do it in person. I'd like to create a series going through Canadians' finances and hopefully helping them get out of debt or manage or plan their finances or plan for retirement. Thanks for watching and tune into the next one.